Rabu, thank you. 5:37, wake up money time. If you own your own home and are thinking about leasing it out, you may be wondering what you should do first.
Broker Chris Schilling is here to talk about how you can take the leap and become a landlord. Good morning to you, Chris.
Good morning. Good morning.
All right, there's got to be some liabilities involved here, right? Let's start there.
There's lots of liabilities. So if you're thinking about taking the plunge, the things that you need to consider is that now you're converting what it was your principal residence into a business. And so things you need to get are insurance, because now it's a business. I mean, what happens if someone, and we don't like to talk about it, but what happens if someone gets injured or dies at the property? Are you liable? I mean, a lot of those things you can insure against, but that's going to increase your costs. So you can't just take, if you're going to make $1,400 a month for the rent, you don't get to take all that and put it in the bank. You have to, divvy it up and send the money where it goes.
So how should you prepare to do this? Because it does sound like you're going to pay much more, than see some sort of income off of this.
But it really depends on the area. I mean, some of the properties are worth more, and you're going to get pretty good rents. Rents in Houston have been going up. In fact, right now it's a great time to buy because it costs folks so much more to rent a property than it would to own them because those costs have been escalated. But you really need to take into account, your taxes. You need to take into account what happens if the property is vacant. So, it's not going to be leased forever, so you have to say, okay, well, it's going to be vacant for a month or two. And then I'm going to have to make ready, put in carpet, paint it. You just need to add all those things up, put it on a spreadsheet so that you know what your real costs are.
And insurance, how does that figure in?
Right, so your insurance now is going to be much more expensive. So you need to talk to an insurance professional so they can give you the exact amount that it's going to be. But generally, because it's going to be a business, now you're holding them liable for what activity goes on there. I mean, what happens if the folks end up doing drugs there? Or you just don't know. And so we're going to have to insure against that, and it's going to cost you more money.
Should you always have a chunk of change or a separate savings account for this property if this is the plan?
I think so. I mean, in fact, what we advise folks to do is set up a bank account where the tenant has a bank account. That way there's none of this, the checks in the mail. If they bank at one of the larger banks, you can go ahead and set up a bank account that's specifically for that, so that now you're watching how those dollars come in and come out, so you can make sure whether you are or are not making money in this project.
How do you figure out how much money you're going to make? Like, what do you deduct, and how does that work?
Well, some of the things you're going to deduct is, the payments. So if you have a mortgage, you're going to need to deduct that. You're going to need to deduct the insurance. You're going to need to go ahead and account for it being vacant, account for real estate commissions. And so there's a whole list of things that are going to be deductions from what that total amount is. So really consult with a professional. There's lots of things you can look online. It's not a bad idea to become your own landlord. You just need to take into account all of the pros and cons for you to make that good decision.
And it's definitely a lengthy process, so you got to do your research and all your homework before.
You bet.
All right, Chris, that's why we have you.
Thanks,
for
Chris.
coming in.
You bet.